Just as buyers are returning to our housing markets, we're hitting another problem. We're just not building enough homes. In this week's Property Insider chat, Dr. Andrew Wilson and I explore how falling inflation and a surging buyer demand are colliding with a deepening housing supply crunch. Building approvals have taken another hit, yet auction clearance rates are soaring. So we delve into what all this means for house prices and for your property strategy. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. Are our property markets about to face a new challenge, or is it actually a fresh opportunity? In this week's Property Insider chat, I'm again joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, and I want to unpack some of the latest economic data and housing trends. So I'd like to ask Andrew about, is inflation finally tamed? And what does this mean for interest rates? What about the worrying fall in building approvals? What's really behind the housing supply crisis? And we'll also talk about the incredible resilience in our auction markets, even at a time that auction listing is surging. Hi, Andrew.
Yeah, g'day, Michael. And we're into June now, so happy June, happy winter. Is that an oxymoron to say happy winter? No, of course not.
It's crispy, but it's not.
Yeah, that's right. And some people like the snow. So if we ever get any snow in Australia, I'm sure we still get snow in Australia, but well, we're into the snow season. So happy snow season.
Well, there's been quite a bit of news and data come out. The latest inflation figures came out and showed a steady annual headline inflation. Underlying inflation nudged up a little bit. What do those two indicators mean, and what does it mean for the Reserve Bank?
Well, we're seeing a continuation of the trend when we look a little deeper into what's driving lower inflation. The key components, once again, are electricity, changes in electricity price over the past year. And of course, that's courtesy of the government's electricity subsidy. Don't know how that's going to play out over the next year, but we wait and see, of course. And the fall was a little bit, even though it was still a fall over the past year, it wasn't as a significant a fall as we had over the year ending March, Michael's. Year ending March, electricity prices fell by 9.2%. They only fell only by 6.5% over the year to ending April. So that obviously had an impact on higher inflation. But to offset that, once again, we've seen another fall in fuel prices. Fuel prices were down over the year to March by 7.6%, but the year to April, they were down by 12%. So those two factors sort of balance themselves out, Michael. And we also had an improvement with rents. Annual rents rose 5.2% over the year to March. And they were down a little bit, but up by 5%, but certainly an improvement on the March data over April. So that gave us a steady result. Underlying, however, picked up a little bit to 2.8%, up from 2.7%, the annual underlying inflation rate over March, but we're still well within the 2 to 3%. Well, we're within the 2 to 3% range, Michael. And we do know, and we speculate here, of course, on where the oil price is going, that continues to ease. And we know where oil prices are over May. So we know how that will impact the May monthly figures. And that again is lower. So the question mark is the reduction in the impact of electricity prices. How will that play out over the next few months, which we've been certainly a major factor in having our inflation rate back within the target range. But that was the plan.
So one of the other sets of data we regularly monitor, Andrew, are home building approvals, because we know that we're in the middle of a supply crisis. And even though home building approvals give an indication of the intention, it doesn't actually mean that what's approved gets built, does it?
Oh, that's right. And particularly, its impact on, I guess, actual, live-in buildings is also problematic, given that a significant proportion of our home building approvals are apartments, and they take some time to get out of the ground and be completed. So probably a 3-year horizon, would you say, from the approval to the completion, 2 to 3 years? Yeah, it's certainly looking ahead, but there's unfortunately with the latest April figures, no good news. They're down by 5.8%. It's actually consecutive months now that we've seen a decline in building approvals for homes. Of course, 9.1% fall over March, and that's followed up by 5.8% fall over April. Again, it was units that were dragging us down. We've had a big year so far with unit development, Michael. So, we can see that volatility that comes month by month with unit approvals, because you can get a very large development coming through. And of course, that pushes the headline number up. And if that isn't followed up the following month, then of course we see the headline number down. But units were down 19% over the month, Michael, and houses were up 3.1%. So a bit of a revival in houses over the month. And houses have been looking just a little bit weak this year so far. It's really been the story this year has been a revival in units, but that's starting to flatten out now. But as I said, it's a volatile data set, so we need to look a little bit longer through the numbers to start making a position on underlying growth. But underlying growth's okay, and we'll look at the data shortly. Western Australia was tops. Total homes up by 9.6%, and we're now starting to see that quarterly trend easing, Michael. So the underlying trends are just having started to pick up on the back of those unit approvals this year, as now starting to ease off. So if we look at the breakdowns in the particular types over the longer term, houses up 4.7% so far this year compared to the same period last year, whereas units are up 44.4%, Michael. So a big surge in units this year to date compared to the same period last year. And over the full year, similarly, units are up 12.7%. But just when we look at the trends starting to dip away there, the underlying trend in terms of building approval still tracking higher over the month compared to the same time last year. But as I said, that underlying trend is now starting just to ease, and that obviously reflects weaker data over the last 2 months. And when we see the breakdown there, you can see that it was actually the unit trend that's fallen away, and that's what's affecting the overall trend with the latest data. When we look at the breakdown for the capital cities, Michael, no surprise, Melbourne continues to lead. Sydney's starting to catch up there in terms of total approvals, and that's because Sydney's now taken over from Melbourne as the leading capital city for unit approvals over this year so far. There has been a surge in unit approvals in New South Wales this year. And look, a lot of that is obviously a very proactive stance from the state government there in terms of expediting unit development. So governments are obviously keen to try to offset the issues with undersupply in our housing markets, and we can see there that particularly Sydney is undertaking or is experiencing a surge in unit developments, and has now moved ahead of Melbourne, but still down compared to overall dwelling approvals. And the other capitals, Perth remains there in third place, interesting, and on the back of, as we saw, a big surge in house building approvals in Perth, Michael. So some interesting breakdowns there, particularly in terms of the Sydney market unit approvals. And when we look at the growth in the types of properties being approved on a capital city basis, we can see there, as the aggregated data showed us nationally, that there's a big surge in all the capital cities for the number of units approved this year so far compared to the same period last year. Of course, Adelaide and Perth don't have the sort of numbers that Melbourne and Sydney have, and they can tend to be volatile as larger developments do come through in a relative sense. But still, Sydney and Melbourne up 108% over the year to date versus the same period last year. Sydney up 63.1%. So some strong results there for units. I think it's interesting when we look at houses, Michael, that Brisbane's actually down 0.8% for house approvals this year. And Melbourne only up by 0.9% for house approvals. So that's what we've been tracking, that house approvals have been dragging the chain compared to units this year. And you can see that in the breakdowns for particularly Melbourne and Sydney for house building approvals. So the long-term trend is starting to improve, still down 30%. And this is the annual trend. So this takes the annual volumes of building approvals for capital cities on a year-by-year basis, on a month-by-month basis, the annuals. And you can see we're still well behind where we were at our peak back in 2015, Michael.
The federal government's got an ambitious target of building 1.2 million new homes between 2024 and June 29. That equates to 20,000 new dwellings, homes every month. We're not getting anywhere near that, are we, Andrew?
No, and of course, it's the builders that'll build the homes, not the federal government, and there's nothing much they can do about it, as we've seen over the last couple of years since they made those heroic predictions, which won't be met. But certainly we've had an improvement in units, and that's something that local governments, state governments can work towards fulfilling, but we're still well short of where we need to be. But and as I mentioned, the sobering latest data shows that the trend has actually just started to flatten a little bit. So we await what happens over the next few months. And when we see the breakdowns in the capital city, long-term trends, we can see there that units, the lighter cycle there is picking up quite strongly this year, as we've already discussed, but still well behind where they were at their peak in 2015, 16. These are really low numbers, picking up, but they're still very low relative to where we used to situate ourselves in terms of unit building approvals, and just starting to taper off our house building approvals, still below the longer term cyclical peak back in 2017. But of course, that bump that we had in 2021 was the surge from the previous governments, or the government before the previous governments, home build allowance. So still a lot of work to do, Michael, in terms of really getting anywhere near what we need to be doing to satisfy demand with supply in our housing market. So that'll only mean higher prices and higher rents.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Yes, inflation is coming under control. Rate cuts are already in place. Buyers are starting to circle. But as you say, we're just not building the supply, which means, and I guess affordability is improving, of course, as interest rates fall. So that's going to put more pressure on prices, and anything new being built, as we say, each time is going to cost a lot more to build now than it used to. So it's showing the hallmarks of the next phase of the property cycle. And that's also playing out on the weekends, every weekend, on the auction markets around Australia, because despite higher number of properties up for sale by auction, the market's showing a lot of depth with buyers buying up.
Yes, Michael, another big week for auction activity. Trends are continuing. It's certainly a seller's market in most of the capital cities. Of course, it was the final week of autumn, final week of the autumn selling season notionally, but of course the autumn selling season really does run through until nearly the end of June before the winter season starts. And that's what we're seeing, still plenty of activity in our marketplaces, and maybe amplified a little bit because April was such a holiday month, Michael. Lots and lots of distractions through holidays, elections, etc. But as you said, Michael, we had a big weekend of auction numbers to finish the season, finish the month of May, up very strongly across the board. And that, of course, is that we have the King's Birthday long weekend holiday next week. In most states have that holiday, some don't. But of course, agents and owners like to avoid the distractions of holiday long weekends, and we tend to have a surge in activity prior to those holiday weekends, and that's what we saw on over the past week. 1,008 auctions in Sydney, biggest number for quite some time. Certainly higher than the week before. And another good result, mid-70s for Sydney. Michael keeps on keeping on. That Sydney market still tracking higher than where it was a year ago. Melbourne market, of course, tends to be the most affected by holidays. Melburnians like their holidays, Michael. 1,400 auctions scheduled there in Melbourne, and another very good clearance rate in relative terms for Melbourne, over 70%, 71.5%. as we discussed, Melbourne actually tracked as the highest capital there for nearly a month through May, Michael, back behind Sydney again now, but certainly producing more sales than the Sydney market when we look at the number of auctions and the clearance rate. And as I said, very similar to the week before. A good result there, given that there were, the best part of 400 auctions extra or 300 auctions extra compared to the week before. And the big data there, really, when we talk about the Melbourne market, the important data in terms of analytics is the fact that it's still tracking well ahead of where it was a year ago, Michael. And that's what we've seen. Certainly, we can continue to call a much improved Melbourne market currently. Lower auction numbers in Brisbane, a higher clearance rate, and that's quite a reasonable result for that Brisbane market. As we explain every week, that Brisbane market has a bit of a different auction culture compared to the other capital city markets. So 50% clearance rates tend to still reflect a seller's market. Adelaide, similar to the week before, auction numbers down a little bit. But that Adelaide market, when we do look back a year, is certainly not as strong as it was when it was Australia's strongest capital city auction market and was producing very high or significant prices growth at that time. So still a little bit better this week, Adelaide, but still tracking well below where it was a year ago. And Canberra, maybe some early signs. We've said this a lot, haven't we, Michael, with the Canberra market is thinking about reviving. That's a good result for Canberra, certainly compared to where it's been over the last year or so, and certainly well ahead of where it was 12 months ago. So we'll wait and see whether there can be a sustained uptick in Canberra. And when we look at the long-term or the monthly results over the past year, Sydney certainly improved this year and over certainly well ahead of where it was where it finished the year and tracking around about where it was a year ago. The Melbourne market clearly on the rise compared to last year, and a good result there for Melbourne. Its strongest monthly clearance rate for a couple of years, Michael. That's 73.4%. Validation of an improving Melbourne. Brisbane down on where it was a year ago when it was certainly a very robust market, but still with those results, just under 50% for Brisbane, still reflects prices growth occurring in that market. And as we mentioned also before, Adelaide is now tracking lower from where it was a year ago. And Canberra maybe just starting to look like it's thinking about reviving, but really we need to wait and see a few more months before we can, or a few more weeks before we can say that. But if you're looking for the latest auction clearance rates, they're on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at 6:00. And Michael publishes the full national weekly report on his various channels on Sunday, which includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer for each of the capital city markets. So that's about it for us, Michael, this week.
Well, we just had another session a couple of days ago. So for people watching this, if you haven't caught the previous Property Insiders chat, we discussed My Housing Market's housing figures for the end of May, and they were out before all the other data houses, and it showed that national home prices again rose over May, didn't they, Andrew? And there was very strong house markets in every state rose, and most unit markets rose as well.
Shouldn't be surprised that February rate cut starting to work its way into the system, and I think we're yet to see the impact of the May rate cut, Michael, and onwards and upwards. And I think that the autumn selling season, which will complete its journey in 2 or 3 weeks' time, has been a very positive result for most home sellers and most, home buyers too, if you're in the market, as prices continue to rise, avoiding having to pay more, which is likely when we certainly move into the spring selling season, Michael, which we can already start talking about. That's a bit scary.
It is scary, isn't it? Okay, thank you. We'll catch up again next week.
Thank you, Mike.